Hey Dan, so before we start the interview, can you introduce a little bit about yourself and your background?
Yeah, you bet. Thank you. So I've been in the worked as a mortgage lender in the Puget Sound area for almost 30 years. I started right out of college and been here in the same area, living in the same area and doing loans for that entire time. Um, I also am a manager, so I have a couple loan officers that I manage, and I also do
Mhm.
loans myself. I have a team. I have two assistants that work with me, and we work as a team. Um, and so, yeah, so I've been here about 30 years and started out right out of college.
Mhm.
Mhm.
Awesome.
Yeah.
So you said you're doing mortgage loan. So what type of mortgage loan are you specifically doing? Are you doing like residential or what about commercial?
I don't do commercial. I do residential only,
Mhm.
and I do first-time home buyer, normal purchase loans. I do loans for investors, so non-owner occupied, and second home or vacation home, and also vacation rentals. Been doing a lot of vacation rental loans. The limit is up to 4 units, so
Mhm.
a single family up to a fourplex. Anything
Okay,
over a fourplex is considered commercial. So
right. So like
condos.
vacation rental loan, how is that different from the regular, investor loan?
It's the difference is there are times when you can call a vacation rental a second home,
Mhm.
which is little bit easier financing. The rates are better, the costs are lower. When you start, if you start buying more than one, you might have to switch the next one into a investment home. But usually when you do your first loan, your second vacation home loan, it's a second home. So it's typically, 10% down with the normal interest rates. If you're doing investment, you got to put 20 to 25% down and the rates are higher. Yeah,
What are the main mistakes that you
oh,
see in
mistakes.
the first time home buyers or all these mortgage loan applicants?
Yeah. So, my advice to everyone is to always get pre-approved up front and do it as early as possible. One of the biggest mistakes I see is people start looking for a home and getting excited about buying a home. Maybe they use some sort of an online tool to determine if they're qualified. And I think there's a lot more to it than just the basic information. And so I would talk to a lender as soon as possible and
Mhm.
allow them to pull your credit and take a look at your entire scenario, look at your income, look at your job history, and they can tell you, what you need to be doing to qualify if there's some things that are missing in your qualification. And I see it a lot. A lot of people will get excited about buying a house and they, go out, find something, and then they call me and then there's something that holds them back or something that they weren't aware of. Maybe they need more money to close or something that they weren't quite aware of. So I think it's being educated up front. Uh, as far as other mistakes, once you're in the process, you don't want to do buy anything on credit. You want to stay away from any kind of credit purchases during the process because it can come back to kind of bite you at the end. Because lenders do a double check on your credit at the end. Most lenders do that. So that I've seen people do that too, that might cause problems. But for the most part, I would say get pre-approved, get your upfront information, do that step first and allow your lender a lot of people don't want their lender to pull credit. You need to allow them to pull credit. I don't think it's not going to hurt your credit score to pull your credit once. And the information that you're going to receive from that is going to be really beneficial.
But what is the consequence, right? Let's say multiple lenders are pulling their credits in the 3 months time.
What I would try to do is try to have, if you're looking at multiple lenders, I would try to have them all pull in the close proximity of time within a week or so.
A week or
I
so.
think there's a rule out there that if you have your credit pulled by more than one mortgage lender within a month, it doesn't affect your score. It only looks like one inquiry. But within 3 months, if you continue to have other credit pools, it will bring down your credit score for sure.
Okay. So your recommendation is within a week or two, so
Mhm.
as close as possible,
Yes.
right?
Yes.
Okay. And then how is the markets right now?
The market, as far as the real estate market, is crazy. It's really hot.
Mhm,
You need to be again, another really good reason to be pre-approved, and we do pre-underwriting. So that's a benefit. And we also can close fast. So I
mhm,
think this market, you have to separate yourself because there's so many offers coming in um, all the time. And sorry, I got a phone call come in. Um, the
mhm,
market, because there's so many multiple offer situations, you need to set yourself apart. So you could
mhm,
do that with, a higher price or higher earnest money. But
mhm.
what's been beneficial for us is a really fast close, like closing in 10 or 11 business days. So we've been doing that a lot, and we've won a lot of offers with that option.
Mhm. How can you do that within like 11 days closing?
Mhm.
Because normally most of the lenders, when you do traditional loan, right, it would take about 28 to 30 days.
Yeah, so what we do is we pre-underwrite everybody. So part of that 10 or 11-day close, we want to make sure that the client has already applied, they've submitted their documentation to us, and then we will, once we have everything, we can say, yes, you qualify for the 11-day close. And then if you go into contract, we have to do if we need an appraisal, we don't always need an appraisal, but if we need an appraisal, we do a rush appraisal. And I get an appraisal done in about 3 business days. So
Mhm.
that's part of the key. And then pretty much that's the only thing that would hold us up is that appraisal. And then we process the loan and get it through and close it within 11 business days.
My audiences who's watching this interview are also interested in the state government fundings, program
Yeah.
for the down payment assistance programs and all that. So I want to know what are they and are they really beneficial to the buyer?
It's beneficial because it helps you with no money. You can get in for essentially zero down or limited. There are some costs you have to pay, but there's pretty minimal down payment or closing costs. There's no real, the only negative to it is you do pay a higher interest rate. So I don't know I don't have the rates right in front of me, but I believe they're in the high threes for the state bond is what you're referring to, the Home Advantage program.
Yes.
And that, if you were to buy go with a regular loan with 5% down, you might be at 3% or 3.2% or something, where on the state bond you're stuck at 3.875, and I believe there's 1 point required for that as well. And so the costs are a little higher, the rates are a little higher. If you can avoid it, I would suggest trying to avoid it. But if it's absolutely something you need, I do them all the time. So it's a good program in that respect. But I can show comparison of doing one with, or maybe getting a gift for the down payment
Mhm.
instead of the Home Advantage, if you can have a relative that will help out. And we have 3% down programs for certain
Okay.
borrowers too. So you can get in for as little as 3% down.
Is it FHA loan or
There's
conventional?
conventional 3%, and then FHA is 3.5% if they need
Mhm.
FHA.
I want to know what is your opinion on the, 2022, new year, the interest rates and also market outlook.
Yeah, so I think it's going to be the similar strong demand as far as home sales go,
Mhm.
similar multiple offer situations going on for the most part, especially in the King County, Pierce County, and Snohomish County areas. And then I think the rates are going to inch up. I think they've already started to inch up a little bit, and a lot of economists believe that the rates could inch up further, maybe in the mid to high threes, not dramatic, something still
Mhm.
below 4%, which is really good. In the history of rates, anything under 4% is in the lowest that it's been. So a lot of people get kind of, they look at, oh, it's high threes or mid threes. I think that's high. Everyone's used to such low rates.
Mhm.
12 years ago, the rates were 4.5, 5%. And in the 80s, they were in the teens. So these are really, really good rates, and they're still very, very aggressive.
Right? Which
Mhm.
areas do you serve in the United States besides
Uh,
Washington?
I
Mhm.
do Washington, Idaho, Montana,
Okay.
Arizona, Oregon, California, and Florida.
Okay.
Yep.
Nice. Yeah. So if our audiences want to contact you, how they can reach you?
Yeah, the best way is my website is teamgolden.com. or you
Okay.
can call my number 206-920-5950. And then my email is dan@teamgolden.com.
Okay.
Yeah.
Great. Thank you so much for doing this interview with me today, Dan. I
No
appreciate
problem.
your help.
Okay. Thank you.
Yeah.
US က financial system တစ်ခုလုံးအကြောင်းကိုသိချင်ပါသလား Stock market မှာရင်းနှီးမြှုပ်နှံနိုင်ဖို့ stock trading နဲ့ပတ်သက်တဲ့အခြေခံအကြောင်းအရာတွေကိုသိချင်ပါသလားသိရဲ့ပင်စင်စုငွေတွေကိုစနစ်တကျစီမံခန့်ခွဲနိုင်ဖို့နဲ့ကလေးတွေရဲ့ပညာရေးဆိုင်ရာရင်းနှီးမြှုပ်နှံမှုငွေကြေးတွေကိုစနစ်တကျစီမံခန့်ခွဲနိုင်စေဖို့အစရှိတဲ့အကြောင်းအရာတွေကိုနားလည်တကြွသွားဖို့ဆိုရင်ခုပဲGrow and Win မှာစီးပြသွင်းလိုက်တော့နော်